Tesla as a company has never been in a stronger position. Their technology has never been more validated, and they've never been more profitable. This is what that translates to in terms of revenue segments. As you can see, auto here in the red is still by far the biggest driver of Tesla's business. I did assume some growth in the energy business as well. Pretty conservative, to be honest, though. And then we'll dive into that in a second. And then for the service and other, I just sort of assumed a small linear growth. But anyway, those are kind of just guesses. Automotive revenue is really guiding the bulk of Tesla's financials here. So here's revenue and operating income. This is what that translates to in terms of operating margins and stuff for the company. I mean, this is where it gets really fun. As you can see, the year-over-year numbers aren't going to look great until we get to Q1 of next year, when we're going to see strong year-over-year growth. But from there, revenue continues to explode. I think Tesla could be doing over $12 billion in revenue in Q4, when they're delivering over 200,000 cars. So Tesla here just getting started in terms of top-line growth. If we look at 2020, gross profit also going to explode as well. And remember, I still think this is a low ball because I think I didn't assume enough growth in gross margins. Operating income, this is where it gets really impressive. I think Tesla can post a couple $100 million in positive profits each quarter of this year. And then when they really start to have Model Y kick in to growth, I think they're going to be extremely profitable, potentially making more than $1 billion in operating income in Q4 alone. That's an annual run rate of $4.5 billion in earnings per year 12 months from now. I mean, think about that. Tesla at 70 billion, all-time high, sure, but 70 billion divided by 4.5 billion, that's just 15 or 16 times, annualized EBIT in a year. And so I think Tesla, as much as, everyone thinks they're highly valued, they're more expensive than every other car company. If you just look at their financials, what they could do with their current business, I actually think the earnings multiple for the growth you're getting in this company is really, really cheap if these numbers come to fruition. So that's some of the math that gets me really excited. Just to show you the expenses, Tesla's been tightening their expenses pretty rapidly. I assume that they start to expand and start to invest in growth again. So I'm assuming these pick back up. As you can see, SG&A has been really, this is amazing expense control from Tesla here, but I have that ramping back up. And then I also did the same thing for R&D, which they've been controlling costs on. I have them scaling back and investing more in R&D as they get more capital. And so that's how the numbers break down. You can see this is going down to the energy revenue, just to dive down into what I projected here. We're looking at, as you can see, some pretty consistent growth. And then this is a seasonal business. So Q2 and Q3 are going to be stronger because it's sunnier. It's easier to install batteries. So I think that's just kind of how it's been in the past. That's what I assume. And that's why I assume flat in Q4 because it's seasonally weak. Kind of the same thing for the solar business, but this is also just a guesstimate. Now, I want to go to an annual view just to show you how this all stacks up in terms of the financials. Tesla, although they're not going to grow that much this year, only have about 24 billion in revenue, up from 21.5. They've been putting all the puzzle pieces in work for huge growth. That's what's so difficult to understand about Tesla's business. And it's easy to cherry pick, like, oh, revenue was down this quarter relative to the same quarter a year ago, or gross profit doesn't look as good, or cash flow is not as good. Tesla's an extremely lumpy business. They're building cars. This is very capital intensive. They have to spend billions of dollars up front to build out these huge production lines before they can even collect $1 in revenue. So the timing of the spending and the growth all kind of depends on how their factories are being built and how they're expanding capacity. Tesla basically sells as many cars as they can build. And what have we been hearing announcements of this year? GA5 line in Fremont. They're expanding their Fremont, California factory, building this whole new production line for Model Y there. They've been putting months and months of work into that, but have seen zero revenue. So that's why the revenue in 2019 doesn't look good, but in 2020 it will because of work they've done in 2019. Same thing with Gigafactory 3. They spent the whole year hundreds of millions of dollars building this factory, not collecting a single dollar in revenue, yet putting in all of that work. That's going to come back into fruition in 2020. And so that's why adding all this up, we're looking at revenue of 36 billion in 2020. So if you think about a price sales ratio, Tesla at 70 billion divided by 36 billion, less than 2 times forward sales, still a very low multiple for a company that's going to be growing revenue at 50%. Then on a gross profit basis, this is where it gets really exciting. Over 6.6 billion is my estimate. And then full year operating income, about 2.2 billion. So I think Tesla has a good shot. So this year, their losses are going to be very small, only about 141 million. But next year, I really think they have the opportunity to produce billions of dollars in earnings if they so choose. And remember, this is all, can be changed depending on, what Tesla wants to do with their pricing. Maybe they don't want to get a huge profit margin. They want to decrease prices of their cars to get more cars on the road to train their autonomous neural nets faster. Maybe they want to do a huge new R&D project. Maybe they want to start spending a ton of money to build out the mega charger infrastructure for their delivery trucks. I don't know. Tesla could do a million things with their capital, but my point is the core business, most of it, just them making vehicles, is going to be pumping out billions of dollars of cash flow. If Tesla wants to put that on their balance sheet or if they want to invest, I don't know. But the point is that this intrinsic Tesla as a company has never been in a stronger position. Their technology has never been more validated, and they've never been more profitable.